to it. Julia Lee, look, we finished in positive territory for the week. We're in gains, but it could have been oh so much better. We sort of certainly finished well off the highs.
It was a catch-up day for the Australian share market, and unfortunately we saw a negative lead from the US overnight, although over the last couple of sessions the S&P 500 has been up by 0.3%. So the Australian market off the highs, but still a gain of 0.4%. And I guess a couple of the negatives during our session was the fact that we did see the Japanese market coming under pressure because of earnings. That index in negative territory at the Nikkei 225, and we also saw the US futures down by about 0.3%, but still some good volumes going through, seeing that it was Australia Day yesterday and a lot of Australia still on holiday celebrating today. We saw $4.4 billion worth of stock being traded, and if we have a look at where most of the action was today, it was in the material space. A good performance by Rio Tinto, but it was the gold miners which were the absolute standouts. We saw CGX Mining up by 10% on the market today, following its performance on the Toronto Stock Exchange, where the stock gained 8% overnight. We also saw Regis Resources doing very well, up by 7.6%. So some good turnover. The mining stocks very much in focus, and the gold miners the outperformers today.
A degree of caution as well. I mean, is there a big sharp downside risk if we don't suddenly see QE3 or huge amounts of stimulus from various central banks, that we could see a large pullback, if you like, in some commodity prices?
Well, what's keeping risk assets up over the last couple of sessions are the comments coming through from the FOMC about more liquidity. So if we don't see that materialise, we could see risk assets once again taking a step back. But if we have a look at what's happened, we've seen a surge in the Aussie dollar, we've seen a surge in commodities, we've seen a surge in risk assets, and I guess the prospect of currency wars are back on the table. We saw the Japanese Prime Minister coming out today to say that their central bank will move to take down a strong yen. So I guess the strength in currency, a big problem for countries like Japan, where it is primarily an exporting country, and here in Australia as well, our exporters and companies that make their revenue offshore certainly coming under pressure because of the high Australian currency, which reached a 3-month high overnight. We saw News Corporation down by 2%, we saw Brambles down by 0.8%, CSL down by about 0.3%. So expectations of more quantitative easing coming out of the Federal Reserve. There's more expectations of quantitative easing coming out of England, and also sort of the backdoor quantitative easing or more liquidity coming through the European Central Bank, and that's really helping the Aussie dollar, risk currencies as well as risk assets at the moment.
Julia, the Aussie dollar at the moment holding above 106 US cents. What then would you suggest, or what would you be looking to do if you have a large exposure to exporters, or some sort of degree of exposure to exporters who are, as we saw today, going to get hurt by that? I mean, do you look to rotate a little bit out of that into some of these potential catch-up commodity stocks, or do you just sort of sit tight?
Well, one of the areas which comes under a lot of pressure because of the high Australian dollar is the manufacturing space. Stocks like One Steel, BlueScope, which find it quite hard to compete on the international stage when we do see strength in the Aussie dollar. And we have seen that area hit quite hard today. If we have a look at the healthcare space, it generally has a high exposure to the Aussie dollar as well because of production as well as offshore revenue. If we have a look at stocks like CSL, 90% of the revenue is sourced overseas. And you would think that the high Aussie dollar would be good news for retailers because they can import in their products at a cheaper price, but it also means that they have to sell more units if they're selling it at a cheaper price to be able to maintain their profitability, and also that they face competition through international websites. With the high Australian dollar, shoppers are going internationally to be able to pick up cheaper products as well. So the high Australian dollar does start to bite. You think that the miners would be impacted as well because they sell most of their products in US dollar terms, so the high Aussie dollar does impact on them. But because of the high correlation between the Aussie dollar and commodity prices, usually the rise that we see in commodity prices, which helps to support the Australian dollar, outweighs the strength that we see in the Aussie dollar. So generally the miners are a good place to be when we do see that Aussie dollar rise, despite them selling their products in US dollar terms.